Hello and welcome to another episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. There's some really good Woo news. So they raised 9 mil from their top market makers on the exchange. And in general, and especially sort of this tweet here, the exchange has come a really long way from when Don and I signed on. At the time, they were much more sort of single market maker dominant and looking to make a move towards the sort of standard exchange model with diversified liquidity sources, and they've made pretty impressive progress in that time and have moved to something that's just a lot more decentralized and much more standard centralized exchange like. And this is a pretty big deal. I'd recommend you read the blog post and read the thread if you're interested. It's just nice to see things moving in this direction, especially given that we've been pushing for that for as long as our partnership has been around. So if you want to try the exchange, there's a link in the description that supports the show. You can try it without that. And in general, if you're trading on there, if you have any feedback, even stuff like liquidity on specific altcoins or features, you can just leave a comment or DM it to us and we'll get it to the team. I think it is worth trying. I think in general, it is worth diversifying your counterparty risk when it comes to your centralized exchanges. So if that makes sense for you, then consider it. If not financial advice. I'm an idiot. I don't know anything. So with that out of the way, before the charts, just a quick thank you for all the very kind birthday messages. It's very much appreciated. It's still very weird to just be able to open my phone and read so many well wishes from strangers, but also on this channel, you know, you're not really strangers. I'm super grateful to be able to just hit record sitting in my mum's basement and people actually listen, engage, and, you know, basically enjoy the content and maybe even learn something. So all of that is really cool, especially when these sort of milestones like birthdays come around and stuff. I am especially grateful. So with all the groveling out of the way, let's talk about the market. So 9 days until the monthly close. We are still sort of getting rejected from the monthly range midpoint. So that is the 47k level. If you'll recall, for ages we've been speaking about the 44 to 47k monthly cluster, and unless the market really pushes up into the end of the month, and even if it does, there's a long way to go, that will be a close at resistance. Now the interesting thing is, if we look at this on both the monthly and the weekly time frame. So if we look at the monthly and take the highest close and the lowest close, as we've done before, you know, these levels haven't changed, and get a range midpoint at 47. If we do the same exercise on the weekly, as we've done previously on episodes of Monday Markets, and go from essentially range low here to highest close here, we just have some nice confluence type of areas, right? So the range midpoint is confluent at 45, 47k, the same sort of monthly area. But then on the other side of that, we can see that we've got a sort of equally confluent range low around 33 to 35. Now that is quite deep, and that sort of overlaps with much more aggressive and levels that happen to find themselves lower down in the chart. But from a purely kind of symmetry point of view and a purely technical point of view, I think it is an interesting area that would be pretty much setting up for the only real bullish trade that has meaningful proximity to invalidation, right? So the argument there is essentially we had this massive range, we reclaimed it, we rallied a lot higher, and if the market's going to keep bullish structure, then there's no reason why this entire move should end up failing and trading back within the old sort of 30 to 24k consolidation. So you know that the high time frame bulls are wrong if 30k or 32k fails on a weekly and monthly basis, especially on the monthly. You know, if that monthly reclaim and the weekly reclaim get stuffed, that's bad news. But that also means that is your best area for proximity to invalidation, 32 to 35. One way to look at it is the following. So essentially, the meta, if you will, or the thing that's been driving flows is still Grayscale. There's been an interesting development on that front where CoinDesk reported that FTX sold about 1 billion of GBTC since the approval, and that explains a large chunk of its outflow. So the interesting implication there is there was some speculation that the outflows from Grayscale, the question was, why would that be sell pressure if they can just move from Grayscale to a cheaper product like, you know, VanEck or the BlackRock ETF or some other product? Why does this come out as sell pressure? Well, now we know that it wasn't just a transfer from one ETF to the other, but it was more just redemption plus selling. So that's been stifling the flows, the actual inflows to the other ETFs to some extent. And I think from a trading point of view, Grayscale's been very consistently sending similarly sized clips to Coinbase, and the market's been essentially trading off of that, and it's been a very stable number from day to day today. I think at this point, especially as we're trading around the local range lows at the very least, the market is just looking for evidence that that sell pressure is going to abate a little bit, and I think we're seeing some early indications of that. I saw some buying come in on this news or around this news, and some narratives starting to develop that, hey, look, well, it was just the FTX estate taking the part of the urgent sellers, and now that they're out of the way, maybe we can get something more residual, and maybe the inflows can have more of an impact. It won't just be dampened by all this aggressive selling and so on and so forth. So at this point, I really think that the market is waiting for at least a slowdown and evidence of a slowdown from the grayscale spot flows, and then that will be narrative and reason enough for a bounce. And you kind of need tomorrow to happen in order to make that determination, to see if equally sized clips are being sent there and how those are being managed. But just in general, as we discussed on last Monday markets, I think we were around here talking about the weekend price action and how that's not very consequential, since we don't have the ETFs trading at that time. And since that point, whenever we had the ETFs trading, it was just a lot of spot selling on Coinbase. And so it'd be nice if that changes. Realistically, if we look at how this high time frame chart is setting up, where we know that 32, 35 is a nice sort of weekly monthly area, 45, 47 is a nice monthly area on the other side of it, I think here's a reasonable way to look at it. So if we take the extremity, or specifically the lowest daily close in this range, then we can make the following arguments, I think. For short-term perps only, reclaim above here is good, not interesting on a spot basis per se, right? So if we get... Oh, that's a new trading view. So if we get a daily close back above 41, or in general, you can see that this area in particular has a bunch of wicks lined up. If we look on the 4 hour, it becomes very obvious. Cluster of wicks, cluster of wicks, wick, cluster of wicks, cluster of wicks. If this really gets washed out, like the market really pushes and then ends up trading back inside the range, and there's some decent absorption taking place sub 40k, get those sub 40k mental stops, if you will, triggered. We also know that would look quite positive on the daily range low as well, and that might be a good short to medium term setup, because by definition we'd be doing business on account of an excess at an extremity, right? So for short-term perps only, reclaim above here is good, not interesting on a spot basis per se. Now, whether that reclaim just comes off the back of strength, grayscale stops selling, or some of that pressure abates, the market just breaks market structure here, and you have some sort of invalidation, that's fine. Or if it comes off the back of a wipeout type of move, like all these wicks essentially get traded through, and you get a really good reaction from the sub 40k panic sellers getting absorbed, and the market still ends up trading back above 41, I think that's a decent enough signal and extremity to warrant a bit of risk on, if not purely from a technical basis. And then again, you'd be looking towards sort of wherever the midpoint of the range is, then maybe all the way back up to 45, 46. But it's really the extremity you want to focus on. So in the sort of trader mindset, short to medium term, some sort of 40k strength, be it straight through 41 or sub 40 first for some panic and then back above 41. I think that's interesting. But if we zoom out, really the interesting areas begin at sort of 35, maybe as early as 37, which is the monthly open here, right? So this level that I'm sure you've seen Don talking about as well. So if we then overlay that on our daily, we can kind of see that 32 is like a real extreme, and then the first real chunk of support is 37 to 35. So some version of the following to me makes sense. Blue line for short-term perps only, reclaim above here is good, not interesting on a spot basis per se, whether that's on just a daily close above and good strength, or on a wipeout that ends up reclaiming. Alternatively, for this area, I would argue that only reasonable area to do business with spot, high time frame support, proximity to invalidation, etc. Right? So this is the sort of 37 to 35k multi-time frame range low, if you will. And then here we will put absolute, extreme, pray, do or die, etc. in purple. This is red, this is purple. So hopefully that makes sense from a roadmap point of view. So the difference between mid 30s and 41k is that at least the 30s have the benefit of being in an area of high time frame support, sort of monthly, weekly type of levels with a larger pullback. 40 doesn't really have that benefit. That doesn't mean it's not tradable. That just means it's lower conviction and should be approached differently. So this is what the kind of, we can either keep these lines or revisit it or adjust if the market adjusts. But broadly speaking, I think this framework makes sense. We are at the moment at an extreme. It's not showing a ton of strength at the extreme, and these wicks make me a bit suspicious, but it's still an area by definition to be open to trading because it's at a range extremity. I wouldn't be interested in spot setups there per se because it's not at high time frame support, but in the short term, if perps get too horny or if a breakdown gets reclaimed and there's something technical at a range extremity, I think that could make sense for a short to medium term trade. So that's what this section means. If we look at 37 to 35, we know that's the range low on the weekly. We know that's the range low on the monthly. So that's the type of area where you'd expect to have higher sort of probability and conviction setups. That's why I'm sort of emphasizing spot here in general. High time frame support, proximity invalidation simply means you're closer to where you're wrong with greater implications. So, if 41 breaks, does that mean the high time frames are fucked? No, it doesn't. If mid 30s break, does that mean the high time frames are fucked? More likely than not. And I think in general, if you're going to be trading sort of high time frame, large rotations, the reason the argument there is spot is because you can generally expect bigger wicks and for the market to take longer to resolve there. So you don't want to be carried out by your time and price sensitivity. And in general, you'd have a larger target for this. So this would just kind of be a technical trade if it sets up, kind of in and out 1 to 3, 4 days type of thing. Whereas if you get the low to mid 30s, that's an area where we'd want to potentially position for a much larger and longer trade, which is why I'm putting spot there. But again, the exact instrument you trade, there are all sorts of borrow cost, sort of carry cost implications and tax implications, and then take that part too seriously. And then the reason 32k is a sort of absolute extreme, pray, do or die, etc., is because it's still technically a weekly range low level of support, so the market wouldn't be completely chalked there, but it would be particularly scary because at that point the monthly time frame would at least look like it's breaking down. If you consider that 35 is monthly support, if the market starts to trade at 32, then it would look like, hey, is the monthly going to break? Because then that has really dire implications. Now, that could also mean it would be a good bottom candidate. As Don and I discussed months ago on Casual Friday, if you were to get, for example, a wick at 32, which ends up closing above 35 in the monthly, that could look really good. But just in general, that's the extremity of the extremity, if you will. So that's how I think, well, at least how I'm thinking of splicing up this chart. I'm not just, super focusing on the low to mid 30s because there are other levels. That other level is 41. Just the other difference is if 41 gives a setup, I'm going to take that as a sort of pure trader basis, whereas if there are setups in the low to mid 30s, I think those will be longer hold, higher conviction, let's give this market a chance, less trader, more investy type of areas to do business. So that's the BTC roadmap, if you will. Now again, I still think a lot of this is going to be grayscale dependent. That's been the story of the flows as we discussed last Monday market, so hopefully that was somewhat helpful. But I think if we get a bit of a slowdown there, then traders will be willing to come sweep some stuff around 40k. At least traders. From the investor stuff, bigger pullback, cyclical things, all of that jazz is better in the low to mid 30s. Does that guarantee you'll get it? Absolutely not. But that's, I think, a good way to think of the chart, or at least how I'm looking at it. Hope that makes sense. So realistically, it's only 3 areas, right? The 3 areas are the current range low, which is around 41k, the first high time frame confluent range low area, 35, 37, and then holy fuck, this better hold, otherwise we're turbo scammed, 32. That's it, 1, 2, 3. Hopefully that makes sense. I'm just going to delete these lines, and we can re-add them later. On the ETH front, ETH BTC kind of had a breakout consolidation. Now that consolidation is in itself breaking down. I think it'd be really bad for ETH heads if this just resulted in a bleed of some sort, like you get a very impulsive move around the ETF and then it just starts to dribble. That would be pretty dire for ETH. The weekly time frame still looks okay, given the weekly close was above 0.57. That hasn't sort of failed yet, but if it just stalls and does nothing, I don't think that's good for ETH in general. And if we look at the ETH USD price action, much like Don, I'm not a huge fan of this chart. Really, the only argument here is on the daily, where if you're even remotely bullish ETH, basically need 2300 to hold. I think it'd be at least nice from a short-term trading point of view, if we get mini flushes this week, so ETH tests below 2300 and then pops back above, and BTC also at the 40k line sort of tests below and pops back above, I think this would be really good risk-defined setups for 1 to 3, 4, 5 days. If it doesn't do that and it just keeps spot keeps nuking us into towards zero, then the way that this would probably manifest is range breakout failure, so sort of closing back below 2300, and then at that point ETH BTC will probably look like crap, and then you can approach it technically, or you can just say, look, this had a chance to break out, it got a chance to do so with the ETF and it didn't follow through, and that would be really bad. So short term, looking for excesses around 40k BTC and 2300-ish ETH. If someone wants to really do their ass, and then the next day or the next couple of days Grayscale lets up and traders pile in and push on the pain points of those breakdown sellers, that would be really nice. Bigger picture, sort of multi-week, multi-month type of thing, the aforementioned roadmap still makes sense to me. So I think it's nice to have a distinction at this point in the market where you have two mindsets, if you will. Mindset number one is short-term local extremities at 40k and 2300. There could be a setup there. And setup number two is the more sort of passive, high time frame. Look, it's correcting, it's breaking down, let it do its thing and come in and clean up later. And those cleanup levels, by definition, are slightly lower. Hope that makes sense. If this was complete nonsense, let me know and I'll try to do better next time. Thank you to Woo, as always, for supporting the show. Congratulations to them on their raise and their diversification of the liquidity on the platform. If any of that is interesting or you just want to click around, there's a link that supports the show if you fancy that. If not, it's your life. Do what you want. Thank you for the happy birthday wishes. I'm still high on that. So all good vibes here. Have a wonderful week, and we'll see you for the newsletter tomorrow, trletter.com, where Don will disagree with everything I say. And then his stream, Casual Friday, he will be back now that he's in his castle. And yeah, thanks. See you later.